Okay, in this video I'm gonna talk about the RSI, the only indicator that I use and that you probably gonna need, and the only one that you probably gonna need if you use the wave principle. What this does, it measures the strength considering the last number of candles. For example, this is moving slow, this is moving slow, but once it does a significant movement, it marks a number here in the frequency. It marks a low number here in the frequency. The RSI means relative strength index. What it does is measures the strength of a movement considering the last number of candles. In this case, in the normal RSI, it's 14. That means that this movement here is going to consider the last 14 movements. And as you can see, a lot of red candles here, this movement is significant. So I'm not going to consider this a place where the price is going to go back. What I want to spot here is divergence. For example, this one here has lower lows, but here has higher lows. That means divergence, and the next movement may go up, but not just yet. As you can see here, here's a third divergence movement. It didn't make a new low, but it does make a higher low here in the RSI. So that's when the price is going to go to the other way. But the RSI can do much more than just divergence. In this chart that you can see right here, it mixes very well when you see diagonals. When you see, for example, a place where the price is so strong, it's not going to turn around, but it's going to need another height with a lower height, and then it turns around. It also helps you to identify ending diagonals because it's 3 lower lows with 3 higher lows in this case when it's bearish. It also can help you understand where the price is gonna go back according to the last support and resistance move. But we're gonna see more about that later. Right now, I just want you to focus on how this RSI can tell you if this movement is impulsive or not. For example, I can see that this movement up is not significant. It's really weak, and it goes down again, and then it goes up again, and you can see it stayed in this area while it was going down. And it continues to stay there until it breaks above it, and you can see that this is the first movement. It's gonna go up. So let's see the basic of RSI, how to read it. The first thing that we need to do is understand that the RSI has two levels, the 70 and the 20. Below here it's called oversold, and above here it's called overbought, which means is a lot of people have already bought it and it needs to go down, and here a lot of people have sold this and it needs to go up. I like to say that RSI is like an energy bar. When it's up here, it needs to reload before it goes up again. When it goes down, it needs to reload before it goes down again. It cannot stay forever down here. But I also use two other zones that are, for example, the 18 and the 20. That means that it goes even lower than normal. That's when it changes color. As you can see, my RSI changes color. When it's green, it's a strong movement, but when it's cyan, it means it's a very strong movement, and it's gonna make a new low, in this case, yes or yes. And the other way, when it's 80, it turns yellow. That means it's the strongest movement. It goes up, and it's gonna go even higher in the next movements. As you can see, it stayed yellow and it's still making upward movements. The RSI can also help us see where the support and resistance level in this diagram here. How do we do that? When we catch this number 40 or 60, but as we use the wave principle, I like to use the 382 that's close to 40 and also the 618 that is close to the 60. How do we do that? Well, we have a line here that I added in my indicator so I can actually see it, and we can see that the price is going down. It goes back to this level and it goes down again. As you can see here, there is no 618 here, but I can see that here in the RSI, and the price goes down again. It goes back up, it tests this area again, but it's lower here, and it goes down again. Once I have divergence here, the price goes up, breaking above this level. So I have to pay attention because it's not working as a resistance level anymore. So the price goes down, it does some kind of divergence here with a special of ending diagonal, and the price goes back up. Another way that we can do the RSI is with the usual break and retest of the trend lines. For example, I can see my trend line here broke above. Once it goes back, it tests it from the other way and it goes back up. But what happens inside the action of the price is really different. I don't see this breakout here just yet. Maybe if I use my trend line here, I can see the same. But I can see this retest that is not here. It's in the future. And it's really interesting because this way you can find places that normally in the price you cannot see, but you can do in RSI. It's the break and retest of the trend lines. Another one you can see here. Once it broke above here, this is my ABC, but it broke above here. I can also use my parallel channel here to see where it's going to stop. And it did stop in here. It did a recharge in a form of a triangle, and then it go up, and that's where it turned around. But it's really important to see where the support, for example, when this is going up, the price here return to this place and it goes up again, and then the next time it goes back down, it tested this area and then it went up again, and that's when the price went up again. So there are three ways that we can use the RSI. The first one is if it's impulsive. The second one is where our resist and support areas of the movements, and usually that's depending. If it's bearish, it's going to test the upper side 618. If it's bullish, it's going to go back and test the support of 38.2. And also we can use trend lines to spot breakouts, shapes, and also break and retest to see where the price is going to bounce and go away. What's the difference between my indicator and normal RSI? Well, the first thing that you notice is that we have two waves, the one that is a little bit transparent and the normal. This is because I use two kind of a speed RSI. The normal one is 14, but I also use the 6. This is to see divergence that normally we wouldn't see. It has more sensitivity. We can also use the continuation signal where I use it also have a continuation signal where I mark if it's impulsive or not. If it goes above 70, it turns to red. If it goes above 80, it turns to yellow. Yellow is stronger than red. Red and yellow usually means it's an impulsive movement to the upside. It also turns to green when it goes below 30. And if it goes below 20, that's cyan. When it's green or cyan, that means that it's an impulsive movement to the downside, or a strong one that needs correction. It also calls for a stagnation. Once the RSI reaches these levels, that means that the price is going to stop. It's not a trend reversal, but the correction is going to be started. But the correction is going to start. If it shows divergence along with an ending diagonal, then it's a confirmation for the future trend reversal. It also helps us find the support and resistance zone. When it's an uptrend, we use the 40 as a support. When it's a downtrend, we use the 60 as a resist. These levels blocks the price moving, indicating corrective wave, and that's not as strong as impulsive. For example, the price can be in correction and stay in here until it does something, or until it does something down here. And the last thing that we need to use, and the last thing we need to consider to read the RSI is the usual trend line and retest. And the last thing that we need to consider is the trend line breakout plus. And the last thing we need to consider is a trend line breakout retest strategy. Just as the price trend lines, we can use these breakouts to find the retest for the other side. And that is very helpful when you see something like this. And just as a curious data, we can use ABCs and impulsive structures inside of here of the RSI, like tracing parallel channels or Fibonacci retracements. You can also use them here in this. Just remember the wave principle is we are studying wave, and what we see here in RSI are waves, so it's always the same. So how can we use the RSI to actually trade? So here's an easy setup for using it. The first thing what we need to do is identify our pattern, and you can see that the price is going up. Then we have divergence at this top. When it breaks below here, then we have our ABC. That's when we get in. When when we find this divergence in these two tops and we go down. When do we quit? When we see divergence down here, then we quit here. And we can see that this is still going down because it have this resist. Then the price broke this and go up. Then we consider to make a, then we consider to buy below. Then we consider to buy when this retrace. I trace my Fibonacci here, wait for the 618, the price goes back down, and what do? Wait for my trend line. Because, well, I can see that it has a higher low here, but it has a lower low here. That means a hidden divergence, and the price is going to bounce into the upside. We also have this trend line up here. We can also see that this is going to break above this place. How do we buy here? Is that we have this trend line here that is being broken, and also this one is higher lows, but here we have lower lows. That means hidden divergence, and also this is the retest of this trend line. So we can make a purchase here. And when do we stop? Is, well, I want to not stop. Well, I'm not going. And when do we stop? Well, I'm not going to stop here because it's yellow. That means that this movement is really strong. I need to wait for a little longer, and I wait for a new high. Then I see a triangle. I know triangles are preterminals, and I have to see another diagonal at the upside, and I see this with a divergence here. So that's when I stop my purchase and maybe consider opening a short, but that depends. So you usually follow the wave, just watching how the RSI is gonna give you these signals along the way. Another thing that we need to remember is how to identify if it's impulsive or corrective wave. When it's very steep, we have a lot of angle, then it's impulsive, and then when it's lateral, it's corrective, and that's something that's going to be reflected in the RSI. The RSI also can be used to identify the volume, or if there is divergence, that means that this movement is strong, but the next one is not as strong as the last one, and it's getting weaker. And when it goes to 3 higher heights with lower heights, that means this is divergence, and this can be any diagonal to turn around and make a new movement to the other side. Let's see an example here. We can see that this movement is an ending diagonal, and it's doing 3 higher heights, but it has divergence here and it turn around. But it's too quick to make another significant turnaround, so maybe I don't have to do anything here. But it's really important that where the price is going to go up, it does another ending diagonal here. So this is A, this is B, and this is C, with a divergence here in RSI, and here I have my support level. And you can see it goes down, then it goes back to test to the other side, and then it goes down again. So I put here my entrance to the 618 and go back here where it's take profit, the 618 of the extension. In this side of the screen, I can see that this height has divergence and it's not going to go really above it. I also have this trainer that it broke below, and what do I see here is that the price came back down here and it came back to this zone to make a new low. And then the price came back twice to this place, and the price keep going making new lows because the price found here your resistance. In this example, I can see that these two doesn't have a really significant divergence, and I need another low. But the most important thing is that you trace the trend line here, and you can see that the price, while it was going down, it always found resistance in this level. But once it broke above it, that's when it's gonna go and turn around. And this time it found support in this level before it make a new high. And it continued to find this level as a support to continue to the upside until they have 2 higher heights with this divergence. And then the price turn around. Tracing your trend line here, you can see that it turned to the underside of the RSI below 50. In this case, we also have an ending diagonal up here, and we can see that there's a divergence here with 3 higher heights and 3 lower heights, and that's when it turns around. Broke below the structure ABC, found support in this level, and goes down. The same goes for this example like at yen, that you have an ending diagonal like this, 1, 2, 3, 4, 5. It broke below, there's an ABC, and what does happen in these 2 heights? It has divergence. Then the price goes down, it marks a strong movement down, it finds a resistance at this level, 1 and 2, and then 1 and 2, it goes down, makes a new low. And it keeps going back to these levels, as you can see here. And you can see my faster sensitive RSI here making this divergence that is not very visual in the here. So it's important to actually consider these hidden divergences that is only being shown in the more sensible RSI 6. And you can see that after it was making new lows, always returning to this zone, but it continues to go down until it makes this strong movement here that goes to the upside, and maybe this turnaround after that. For the last example in this video, we have here an ending diagonal that it broke above this structure. It got a running flat to go up, but what happened in the RSI is that it has this level of resist. It has divergence here, and once it broke above it, I have to consider this movement as an impulse. It went back, found support in this place, came back here, and then it went up again. What happens is you have a divergence. But divergence not only means trend reversal, it means the correction is going to start. And that's when it did this long movement. It ended with an ending diagonal with many higher lows. And what happens when this triangle broke? It found support in the upper side of it, and the price started to go up after it broke here. So it's really interesting how the RSI behave when the price is actually moving. So how do I use this RSI in my trading view? Well, you basically just copy this text and paste it there in the Pine editor. But you need to understand a little bit about this script. What it does is changes color when a certain level is reached. When it's above certain level, it changes color. If it's below, it changes color, and so on. You can change these colors if you want, but I use them. That's the primary colors, yellow, jet, blue, and red. And that means that we are already moved by them when we see them. So get used to them. It's gonna work faster if you do it that way. I also added more lines to the original indicator. You have like 5 lines in there. So you can see the levels is the 50, the 382, the 20, the 80, the 70, and the 30, 618, which give you different levels of support and resist, and if it's impulsive or not. And the last part of the code, you can see here the second RSI that looks a little more transparent. You can change the number here if you can modify the sensitivity. If you just don't want this at all because you think it's makes garbage or clutter to your indicator, just delete it. Once you copy this text, make sure that you replace this space with tab. Somehow the Pine editor gets an error if this is a space and not a tab space. That's it. So let's see how you copy this into the trading view so you can use it. The only thing that you need to do is copy this text from this blog. You can get this from the PDF that you downloaded, that is this one. You go down here, you copy this text, copy it, and go back here to your trading view and open here and go to your Pine editor and open a new blank indicator. Delete everything and paste. Make sure that this looks fine. It has to look everything gray. And then use tab to move this color right here in all of them. If it's a space, it doesn't work, you have to be a tab. You click on save. Put a name here like wave principle, RSI, click a save, minimize, go to indicators, my scripts, and click here, and then you have your RSI active. And that's it for this video. Hopefully you understood what the RSI can do for you. I actually recommend you to read the PDF, practice it, make use of it, and notice how this indicator tells you things quicker way, because it uses colors and new lines that normal RSI doesn't have, and all this you can learn inside this book that is called The Complete Guide from John Hayden. You can find all this information in there, but I just simplify it for you and use this colorized RSI to make it more visual appealing. So that's it for this video, and see you in the next one.